Hi, everybody, and welcome to this week's Middle Class Investor. This is Seth Martin, your host, and we are looking at a chart of the S&P 500, and you can see we closed the week at 2727.72. We had a pretty, it was a pretty bullish week as far as trading weeks go, and if you recall, we had talked about a couple of different scenarios last week. One was this could, kind of run up, roll over, and then come in and break this high right here. The high from the low from this week right here. That didn't happen. So what we can say is that this corrective piece right here is not over yet. This piece right here that goes from here to here to here. Now it looks like it's close to being over. There's a gap right here that we've been talking about, so it might go a little higher. In fact, I got another chart I'll show you. It looks like it didn't quite touch the decision point area, although it shows touching the decision point area here. It didn't quite do it on the E minis, and I'll show you that chart in a second. So I think we're down to two scenarios now. The one scenario is that this little wave 2 here is about to be complete. So this was a smaller degree wave 1 down, and then this ABC could be of the same degree, the 2 up correction from this move down here. That's possibility number one. And I don't have it's probably better than 50-50 that's it, but this whole thing kind of looks like a triangle too, so that has a pretty good possibility, and I'll show you a chart here in a minute that looks, that kind of looks like that, where this is all wave 4, and then we're going to have a wave 5 up to somewhere up in this area up here off of this swing high peak. So again, the two scenarios are we're just about done and this is going to roll down. So let's say it trickles up a little higher and then starts to roll down. Or the other scenario is, maybe it just pulls back a little bit, back to the trend line, and then resumes higher and makes a new high up into this area. So we're down to two scenarios, and maybe you're thinking, well, that's always the way it is. It's either up or it's down. Well, that's true, but I think I can show that there's a little bit more to it than that, because if it were to pull back to this trend line and start taking off, I think you can still trade and make money in this move right here. Whereas if you don't have a place where you're wrong, so for example, if this just pulls back a little bit, comes up, and then continues to run up, then I know I'm wrong right in here somewhere. Okay, I can say I'm wrong here. It's not going to go. If it goes any higher than this, then it's going all the way to here. So I can be wrong right there. Okay, right in here. As opposed to just saying, well, it's going to go up or it's going to go down. I just have to decide which way it's going and leave it at that. I think there's a little bit more to it than that. I think we can show that it's possible to get the odds in your favor better than 50-50. Right now, I'd say because we have these lower lows, these lower highs all the way down, I would say scenario number one, where it comes up a little higher and then rolls over, is probably the first scenario. So you could see like up Monday and Tuesday, and then intraday Tuesday roll over and start to make its way down. If it doesn't do that, if it just pulls back and looks like it's going to bounce, then I think we're probably on our way to new highs. Okay, hopefully that helps. There's a lot of scribbling on the page there to say that, but you can see we're still inside this channel from way back in 2009, and technically speaking, as long as we're in this channel, the uptrend's still intact. What we're trying to do is get a little bit more clarity, because this from here to here was 10%. Well, from here to here is going to be 20 or 25%. So maybe you don't want to lose 25% before you decide to get out. And so that's what we're trying to do here. All right, let's look at the 10-year yield. It started to resume its way higher again this week. It looks like, we've been showing here that we should continue up a little higher, maybe up into here before we get a decent pullback. And it could be that this could coincide with the top in the market. Let's say yields run up next week and the week after, and then start to pull over, and then that coincides with the market selling off. Maybe, I don't know, but certainly we're close. We're fairly close to a pullback in yields, and like I said, you should see when it does start to pull back. You should see a pullback at least into this 2.5 area, and maybe as low down here as the 2.0, 1.9 area, the midpoint of this large white candle, which is probably wave 3. This is probably a wave 3 right here, which makes this wave 4, and this is 5. So if you're still in those bond funds and you're waiting for better prices, better prices may be on their way. So, but if you're someone who just puts your money in and wants to go to sleep, hopefully if you're that person, you're out of bond funds at this point. Okay. All right, let's look at the 13-week Treasury. As you might expect, let's take it off log. You can see we're back kind of on this line. I haven't really changed this line. It's broken the line a couple of times, but more or less it's on the line. So, which is also following this 10-week moving average. This green line right here. So, it looks like the Fed is they're looking at this too, and so they're probably saying, well, we got to continue to raise rates. Now, there's a lot of talk about, is it 2 times, is it 3 times, is it 4 times this year? It doesn't really matter. As long as this is going up, the Fed's going to raise rates. I can promise you that. They're not. The Fed does not set rates. That's every now and then, if you watch enough of that CNBC and Bloomberg and stuff like that, you can hear somebody kind of say it, but they don't really just come straight out and say it. But I think all those guys on Wall Street know that. All right, we haven't been looking at the various countries lately because they pretty much look, like the U.S. Like if you look at Germany here, this is Germany. It looks a lot like the U.S. market. You had this big down, although this looks more like a triangle. So this would kind of indicate it's kind of an ascending triangle. That we've broken out. We've had our pullback, and this is going to start moving out to new highs somewhere up in this area. Possibly, I don't know. Japan looks a lot like our market, I think. And I've heard people over the years say that we're basically following. If you look at, you can see various parallels in Japan's market. Sorry about the in and out there. That looks like it follows our market. So if it does on a very large scale, then maybe it does on a smaller scale as well. Again, this looks like a kind of a triangle. If I was looking at it kind of big picture, I would see a triangle and then a breakout, pullback, and next leg up, breakout. I've long since all this has been happening, long since reminded you guys there is a gap. In fact, let's just go back to the S&P 500 and show it to you. There is a gap above the market pricing for the S&P 500. And in order to show it, sorry, I'm going to have to put it on a daily chart. And gaps typically, get filled, which has always been my concern about this gap. That maybe the highs are not in, but you can see there's a gap between this low and the highest high here, which is this one right here, and that right there is a gap. Okay, and gaps gaps tend to get filled before the trend continues. So that's the one piece of evidence that still kind of has me thinking this is a triangle and this whole thing might be going higher in a wave 5. Also, when you pull back and you look at kind of a larger chart, the symmetry is a really good indication too. But let's get back to the countries, because I want to show you the United Kingdom. The United Kingdom looks a little stronger than Germany or Japan or even the United States. And this may be giving us kind of the indication that we need to say that we're going to make a new high. In fact, you can kind of see the A here. I'll just draw it. You can see kind of an A, B. Well, I guess it's like a zigzag where this is A. So A, B, C, and then A, B, C. So you can kind of see the correction move here. And then you can almost kind of see it like a 1, a 2, a 3, a 4, and a 5. Now, it could be that this is A, B, A, B, C or something with kind of an X wave, and then this is a C wave. So this whole thing could be corrective. And you'll notice they don't have the gaps on their chart that we do. In fact, whatever gaps were there, they closed them. This was the last one, and it looks like it closed on Friday. Maybe I'd have to really zoom in and see if that closed on Friday. If not, maybe there's one more push higher and then you close the gaps. And so this could all be, just corrective. But it is stronger. It does appear to be stronger than our market, even in this if this is a corrective phase, even in that corrective phase. So let's go back to the S&P 500 and just look at it under that light. What if this was 1, and this was A, B, and so C maybe comes up to here? And it could come as high. I mean, as long as it doesn't make a new high, it still could be wave 2. So it could come all the way up to and close the gap right there, which we're a long ways from that. So we got, what is that? That's 2850, and we're at 2727. So that's 125 points from now. So that's quite a bit of money to be made there in the market. If it does move from here all the way up to this line. We'll leave that line on there just in case, just so we can remind ourselves of what we were looking at. All right, let's switch over to the TOS charts and look at gold and silver and some of those products. Here's gold, and you can see it's really been chopping around for the last 10 weeks. And sometimes this is a consolidation, where it's just trading sideways and then it's going to make another leg up. But sometimes this can just roll right back over. So I'd say the odds are that it's going to, consolidate, or it's been consolidating, and it's going to thrust up and then kind of roll back down. But who knows? Gold and silver right now are very tricky instruments. I think. I think there's going to be better places to buy gold and silver. I think silver is a pretty good buy right here, especially if you think the correction is going to run all the way up to here. I don't know if it will or not. It might only run up to this from this pivot here. So I don't know if you can see that, but there's a pivot. Let me just draw it like a little DP off this pivot. So there's a pivot right here. And maybe that's where silver goes before it rolls down. But if you look at this, the 50% correction is up here. The 62% correction is up there. So I would say normally, even in an ABC, you get B would correct somewhere between 50 and 62%, somewhere in this zone. So I don't know. To me, this is a pretty good odds favoring. It's hard for me to believe that silver would just roll over right here and start going lower, unless it just goes down to here and then starts to rally. But that wouldn't make a lot of sense because this whole pattern looked fairly complete right here. So I don't know. I don't know what I don't feel comfortable with either one of them because I don't. It's hard. When you have this much consolidation and this. You just got to hold these things for a long time, and and I just don't. Right now, it's just not clear to me. I wouldn't be comfortable putting any money in it because I just can't see. There's a Dave Johnson, one of my coaches, used to say, if you can't see it, you can't trade it. So that makes a lot of sense to me. If you can't see it, you can't trade it. All right, the euro. The euro is clearly selling off, although it's in some sort of counter trend rally right now. You got this big bottoming tail hammer, and maybe you get a run up a little higher, something like this, maybe into this this moving average here, and then this should roll over and make its way down a little lower. This is the fourth wave low, so we would expect this to travel at least into here somewhere. That's my expectation. I kind of screwed this up and got out right in here somewhere, and so I've left some money on the table. I've been looking for a place to get back in. Probably get back in. Try to get back in this week. See if it runs up to this moving average, or somewhere in there, and then see if I can enter back in. If you look at this on a let's say a 4-hour chart, you can kind of see that this is probably wave 1, 2. This is all 3. So 4 is probably going to take us back up into the 1.20 area, and maybe it's gone about as far as it's going to go now. It pulls back a little bit and then runs up into that 1.201 area, and that's where I would try to get into, catch the next leg down, or at least to hold it. Initially I was in. I don't recommend this, but I was trying to pick the top in here, and so I think I got in like right in here, and of course it ran up and I was losing money, but then it really sold off and I was making money. So I made some pretty good money there. But then right in here, let's see, I was in again in here somewhere, and I think I got out like right in here. So I missed all this. So that's, it's just not easy. I don't care how good you think you are, it's still not easy. It's hard to hang on to these. If you look at it now in hindsight, you can say, oh, well, you should have just left it on a 4-hour chart, and as long as it was below this blue line, you should have just stayed in. Okay, well, maybe so, but look here. If I had stayed below the blue line, okay, it was below the blue line, and then here, okay, you get out, and then maybe you get back in, but, I mean, it's just in hindsight, it's easier to see that. It's harder to do that when you're in the middle of the trade. But I like the 4-hour time frame for currencies. You can usually stay in these trades for a week or 2 or 3 even. So the 4-hour time frame really works well, I think, for trading currencies. All right, let's look at the British pound. Let's go back to the weekly, because for this program, I want to capture the bigger picture. So you can kind of see this, on the British pound US dollar, you got this huge, what looks like an ABC. Here's the problem. It looks like the dollar now is rallying. So if I have, let me just draw this real quick. In case some of you, well, let me do it this way. Just use this tool to draw it. If I'm trading the Great British pound versus the US dollar. Okay, now we're going to talk a little bit about algebra here real quick. And some of you haven't had algebra since high school. But if I got a big number and the number's going up in the denominator, what's happening to the overall number? That's getting smaller, right? So if the US dollar is going up relative to most currencies, then what should happen to this combination of currencies, British pound, US dollar? Well, it should be going down, right? Which it is right now. So this is where you kind of run into some conundrums. Whereas like the Canadian, the US dollar, the USD, Canadian dollar, the USD is in the numerator, excuse me. So if the US dollar is going up, relative to most currencies, then this whole thing is going up. This combination of US dollar, Canadian dollar is going up. Okay, so I hope I explained that okay. But the reason I'm explaining that is because this looks like a big old ABC, and this could be, you know, a great place to be in the British pound US dollar. And maybe it is, I don't know. But I would say with the US dollar gaining strength, you know, this is probably not going up yet right here. It looks like maybe it should make some more lows. That's all I'm saying. I think what I would do is I would focus on this ABC and the US dollar, Canadian dollar, because the US dollar is in the numerator. And since it looks like the US dollar is going up relative to the euro and some other currencies, then to me this would be the better trade to get in and hold on. Because then you've got an ABC, a pretty large degree, excuse me, a pretty large degree ABC. And we would expect this currency pair to make it all the way up into this 1.47, 1.48 area. So that's a pretty good trade, right? 1.279 to 1.48. That's, I don't know how many pips that is, but if you trade, you know, say a 50,000, like a half lot, that's probably, this kind of move right here is probably $3,000 or $4,000. So for about a, let's call it a $600 risk. So you take a $600 risk to make $6,000. It's almost a 10 to 1. That's pretty good. So that's the currency pair I would focus on. Or again, the euro US dollar short after some sort of counter trend rally. Because what we're expecting to happen there is we're expecting the euro US dollar to make its way all the way. So let's say we get some sort of counter trend thing going here, and then maybe it comes to here, we get some sort of ABC back up to here, but then we're going all the way down here. So you could trade this move from here to here. Then, you know, when it gets down here, it'll start chopping and then making its way. You can enter here and trade up to here, okay? And then, or trade to here and not try to get every last little bit. And then once you see kind of an ABC here, then start looking for entry here. Maybe you get in right here and you trade all the way down to here. And then as it starts to rally back up, you get out, okay? So the euro US dollar is a good place to be. The US dollar, Canadian dollar is a good place to be. All right, let's look at oil. Oil, I got to be honest, I'm surprised with oil. Although we do have this big, you know, ABC, it's just that you can kind of see a 1, 2, 3, 4, 5 here, which is looks like all of wave 3, which would make this wave 4, which means we got to have some sort of wave 5 down into this $20 area, $18, $19, something like that. In other words, this right here, this correction, this ABC correction here, this is all wave 1 right here, from here to here, from this point here. Let me just draw it. Unless there's something here that I'm not seeing correctly. I mean, that's always a caveat, but this looks like this looks like all ABC right here. So to me, it looks like 1 started like right here. So this is 1, A, B, C into here. 2, so this is 2. So 1, 2, this is all 3. And it looks like we're in a 4, right? But we should be about done because this is 50%. Now, I was talking about, you know, $75 on oil or so, and we're not there yet. But we did make it to the 50% retracement area, and that's pretty common for wave 4. Now we shouldn't go any higher than $77 or so. And right now we're at 70.51. So we could go a little higher here, but I don't think we'll get much past $73, $74. And then we should see a rollover and a trip back down to break the lows. And the low was $25.91, so something below that, let's say $23, $22, $23. And then I think it's a great place to buy oil stocks. there's just going to be a lot of opportunity in oil, because if you look at the really long-term chart of oil, this is all wave one up to here, up to this 147, and then we've had this ABC. Well, next thing you know, this is 3. So this is going to like $300-400 over the next 50 years. So if you can buy it at 22 and hold it until you die, and have it go all the way to $350, $400, then you're probably going to make a lot of money. Now, it's easier said than done. It's pretty hard to actually do that, but some people do it, and it does work. So, all right, what else do we need to talk about? I think I want to show you off my no, not that chart. I'm trying to see which one. Maybe it's this one. Yeah, this one. So one of the things I wanted to show you was, so you've seen me do this higher lower time frame thing. So notice this was an important low. There was this run down from here, made a low, and then it ran up, and then it came down from there. So this is the last swing into the most recent high above this high, right? So this is where you take your DP. Okay, just like this is the most recent swing right here into this high. So this is where you take your DP. Now, if we go down a time frame, so let's just go to from a daily down to a 90-minute chart. One of the things you'll notice, I don't know if you can see that or not, but we didn't quite reach the DP. You can see we sold off, and then it looks like it's rallying again. So I would say we're probably going to rally up on the E-minis, probably somewhere up here to the 2745 area, and then, I mean, it'll at least pull back, let's say to this area, 2650. So 2750, 2748, pull back to 2650, and then it's going to be, then we get into those two scenarios I was talking about. Is it going to consolidate a little bit and then rally up to new highs in a big wave 5, or is it going to ABC and then sell off and go this way? And like I said, this is a 90-minute chart, so you can actually use this 90-minute chart to decide, at fairly high prices, what you're going to do in your 401k, for example. So just to play out the scenario, let's say, okay, scenario 1, let's say that, okay, both scenarios start with higher prices in the market, okay? So we start running up in the morning, okay? And then we start selling off, okay? Let's say we sell off to right here, that 2650 area, okay? Then we get strong rally, okay? Pull back, another strong rally. Right in here, we might be looking for a trade down this way. Okay, in other words, 3 would begin. Okay. Now the other scenario is right in here. It could start off trading down, and then stop, and then rally up, and boom, we're off on our way to a new wave 5. So if you take a short position in this area, well, you're wrong right here. Okay. And if you want to take a long position, you take a long position here, start trading up this way. But if it gets, say, to here and then rolls back over and starts coming down, well, then you're wrong. You're wrong right there, okay? So you can trade this, you can enter without taking too much risk here. You can decide, which way you're going to go just based on, and we're at a really interesting juncture now. One of the things, we've got a little strength here on our larger degree trend, but that could dissipate quickly. Like I said, let's say it runs up and then immediately sells off, okay, on Monday or something like, or maybe it runs up on Monday and then sells off to this small degree low here, and then rallies again and sells off, but then kind of stops right in here, and then Tuesday it gaps down and then runs up, makes an ABC, and then starts going down, this could be the end of the bull market right here, or it could gap down here, rally up a little bit, pull back a little bit, but not to a lower high, or not to a lower low, and then start to rally, and boom, we're probably on our way. We'll probably be in the midst of a wave 5, which means there's going to be 125 points or so in the market. So right here within this little 2750 to 2620, you can make a really good trading decision, investing decision if you like, about which direction to be in the market. So I'm going to put these lines on here on the chart. I'm going to put some horizontal lines here that I think are super critical. I'm going to put 2750. I'm going to change the color here in a second. And then I'm going to put horizontal line. I'm going to put one right here at 2620. And I would say if we break much above 2750, then we're likely going to all-time highs. If we break below 2620, we're likely, let's make these red. We're likely going lower. See, how do I do this? I never do this. So line, okay, color. Here we go, color. This is the color. We go make it red. Okay, and then this line, properties, line, color, red. Okay, so these two red lines kind of mark our range. And I'm going to say if we go much above this 2750 area, then we're going, I think, to new highs. If we go much below this area here, this 2620 area, then we're probably making new lows, or probably making new lows and well on our way to wave 3. So I think that's pretty good range. I mean, if you can make a decision within that kind of range, I think you're doing pretty good. Now the market doesn't always give you that tight a range to make a decision, but I think that's pretty good. The one caveat would be if this is all some sort of ABC, X, ABC, where we're going to here and then rolling over. But I don't know. I don't see that. That's a lot of correction for this one move. So I think the more likely scenario is that this is a 1, 2, 1, 2. Which also it seems to me would fake out the most people, because they would think, okay, well, I got a lower high here, I got a lower high here. I mean, a higher low, higher low. We got a low, higher low, or higher low, and I'm rallying. So I'm thinking new highs, right? Well, once everybody gets on one side of the market just rolls over and tries to go the other way. Now, one of the things you notice here is one of the things I notice with this tool here is the way this little indicator works. So that might be Monday, and then that might be Tuesday, and then they start rolling over like this, okay? And they start doing this and this. That's what I would look for. So, some sort of rollover like this in conjunction with prices coming down, I think tells us the bull market could be over at that point. But we'll see, right? Predictions of risky business. All right, everybody, that is about it for this week. I really appreciate you coming in. Share it with your friends, family, whoever. If you feel like it's important information. I think it's important. I think nobody will care about your money like you do. I don't care who you're giving it to and how much you're paying them. They're just not going to care about it as much as you care. And the truth is, if you lose a lot of money, the thing about it is, to make money in the market, you have to take responsibility. You have to say, okay, it's my fault. And if you're not willing to say it's my fault, then it doesn't matter if you have money with somebody else or you have your own money and you're trading it. You're not going to do very well if you don't take the responsibility of having the money in the first place, and taking the responsibility of whatever happens to it. It's your fault. So The market doesn't care. You can blame the market, but it doesn't care. It's not like it's like, oh, I'm so sorry. No, it just takes your money. So just, have an attitude of responsibility, be decisive. You're going to be wrong from time to time, but that's okay. That's part of investing. Nobody is 100% right. Nobody, period. I don't care if it's Warren Buffett. The key is to keep your risk small. That's why you have to have some sort of sell strategy. Got to keep your risk small. Do not let $1,000 losses turn into $20,000 or $50,000 losses. It's a disaster. It's so hard to make up your money. All right, everybody. Thanks for coming in. We'll talk to you next week. Take care and have a great week. Bye-bye.